Okay, hello guys. Good morning from here. So today I want to talk about an update on BTC, and I posted on YouTube about BTC going down to a fair value gap right here, and then we likely see it go higher, or if not, if it happens to be that it did a little reaction right there, could possibly see it go lower. So also on September on 16th September, I talked about BTC going higher after I noticed that it didn't break this low, but then it did a stop hunt on previous 3 months. So um, that means we are going to our chart right now, and we are looking at BTC currently right here. So normally we always get to be at the 1 monthly time frame. That is where I analyze and look out for the algorithm data range. Now previously on my Facebook page, I also talk about seeing a bullish structure on BTC, trying to see if it could go for 12 months high, but then it happens to be that price did not actually give us a structural break that we can use to confirm that that BTC wants to go higher to a previous 12 months high. So I'm actually trying to look for it, and I think that was the beginning of this month, I think, or was it last year? Alright, so I have this one right here. So we have the BTC weekly time frame, and I was expecting it to come to this other block right here, and then we likely go see it go higher, but then we won't know until price gets to that point. So now we'll be going to our chart, and then we take a look at it. Alright, so now this is BTC currently right here, and right here I am not actually seeing a structural, but then the only structure I saw we actually saw was this structural break right here, and that is what I labeled previously as areas that I call the breaker market structure. Alright, because that is a major high that was broken. So now the last video I uploaded on structural breaker confirmation, I talked about it going to a fair value gap, and then we'll likely see it go higher, and I was on the 3 months time frame. And the fair value gap I was looking at was this right here, but it happens to be that price just did not get there, and what it actually did was a stop hunt. Now we still have equals right here, right, and if you have the imbalance right there, but then my main focus was on the monthly time frame, and like we can see right here, we have this algorithm D range right here, and the first thing we noticed was that price took out this previous month's high, and then what were we supposed to be drawn to? I remember I talked about if price hunted previous month's high, that means we'll be targeting and we'll be drawn to previous month low, and that is this low right here, and it happens to be price did not take that low, very close to it, but did not take it. Now this right here is the month of August, right, and this is the month of September. If you pay attention to what September did, September traded lower, and what it did was a hunt on previous month low. This right here is a confirmation that price refused to break structure. It refused to break structure right here. So this right here is a hunt on previous month low, and that is the month of September. And if you be paying attention, you'll notice that September have since then refused to go lower. So that means that if I have to invest in crypto, I could possibly invest it at the month of September right there, and that is on September 23rd, and we took out area of support right here. This right here is an area of relative lows, and that is the area where we're having a sell side liquidity pool, right? So we now hunted take liquidity from previous month low, and what I will be targeting, since this is a daily range, not a structure, what I'll be targeting will be this previous month high. Now we are expecting price to get to that previous month high, and either a graph liquidity or we want to continue going higher to take out this high. It depends. So now this is the weekly time frame, and you actually see that after it balanced sell side, it refused to go lower, but then did a structural hunt right there. Now going to the daily time frame, this right here, daily time frame showed us that BTC has shifted structure. And what do I mean by this shifted structure? Right here, after we took liquidity or sell side liquidity pool, now we now eventually see it break a daily high right here. Now, out of that structural break, most of us may probably on the forward time frame might be seeing this right here, and we'll be expecting that to be an area of order block. Now, like I always said before, during the structural break and confirmation, this right here is not a break of structure. You shouldn't be looking at this as a break of structure. Do you know why? Because there's no bearish structure from here or bullish structure from here. Price actually did a consolidation right here. Now, this range right here is also part of the idea of understanding the algorithm day range. Price traded lower for the purpose of doing what's grabbing sell side liquidity pool right here. So someone is willing to buy below the price level at which many traders, we are having loss of liquidity resting right there. All right. Now, paying attention to this, you can actually see that the next candle closed inside. I always say that a break out of a ranging market, I am not considering that as a structural break, because what I used to confirm structural break is either on what I used to say we're having break of structure or break of market structure is either on a bearish structure, we know we're having break of structure and we're going to down and we're going downside, or in a bullish structure where we're having break of structure to the uptrend, then we know that we're going higher. Considering this a break of structure, and a break from the opposite side of the liquidity is a break of market structure. But then if it happens to be the price range and price trade lower to grab one side of the liquidity, what he actually did was to grab liquidity pools resting below or above, and after it tests that liquidity, that means it's just like saying someone bought below right here, which is at the cheaper price level, and we love to sell at those people willing to sell to buy from here. All right, so now they bought from here, and right when it gets to this place, some will be willing to sell it off, right? And the idea of the algorithm is that it should go lower and take orders from here, and taking losses on the pool liquidity resting below here, grab that liquidity, take those orders, and then deliver it to the other side of liquidity pool, which is the area of resistance. So price delivered right here and refused to go lower. Now, likewise, on the other hand, it is actually trading to also fill in a sell side imbalance right here. Now, if price is to balance an area where there is sell side inefficiency or a fair value gap, it shouldn't go above the line of premium pricing of that fair value gap. It should go below and it breaks structure, continue going lower. All right, but then after it trades into the sell side imbalance, it traded backwards to the discount of the fair value gap. Now remember, when I was talking about structural break and confirmation, I said that whenever a fair value gap is violated, it comes back into the fair value gap. Either it used the 50% or the discount level has an area of support in the case of buying. Now, even in the case of selling, like if balance is a buy side inefficiency, it reverses backwards to either the 50% or to the premium pricing of that fair value gap and use it as an area of resistance. That is what we saw happened right here. Now, grab liquidity, balance sell side, right, with buys, and then mitigate it. That means supply is equals to demand. Now, the most interesting part is that this down close candle that most of us will be seeing there has a order block. It is now changed to what we call a breaker block. A breaker block is a failed order block. So when price gets to return back to it, it uses it as a breaker block and use that as an area of support or area of resistance. And that's where we have a confluence right here. That is a two confluence, sell side imbalance balanced. Price didn't give any sign that it wants to go lower, or structure or confirmation entry that it wants to go lower. And then it used the discount as an area of support that is in confluence with a other block right there that turns out to be a breaker block. So now what is it drawn to? We are having it drawn to liquidity right here. This candle wick is identified as area where we're having buy stop, and we like to see it go to that high, and then we will be targeting previous move high. In previous move high, we are having sell stop resting, buy stop also resting on this high. Considering that when price violated this what's it called, order block right here, all right, it happens to be it did not violate the demand, the bullish order block right here. So this could be as regarding this could be regarded as a confirmation entry inside this order block right here, because we have the stop hunt plus a violation of the order block. What is responsible to violate this order block? We have the bullish order block. But then, since there's no imbalance, the order block is now used as a breaker block in confluence with the discount level of the fair value gap. So what is the target? Previous month high, where we're having buy stop, and this would be previous 2 months high also, where we're also having buy stops. And I think that is also a 3 months high, if we have to count. Okay, yeah, that is the highest high in previous 3 months, and that is at the area of 31,000. Now that would be the only place I would target. All right, so when price gets here, it's either we get to identify if it has to break the structure, or we have to just grab liquidity, stomp hunt, and then reverse backwards to create another D range, and we know if we still have to go lower, or we still have to trade higher to be attracted as a draw to areas where we're having sell side imbalance. So that would be the target at which we'll be seeing if it happens to be price wants to break above this high, and if it happens to be the stop hunt, we still look out for what happens, and we're looking out for algorithm the range right there. So this right here is the 4-hour time frame. So this is the 4-hour time frame right here, and this is the breaker block right here, and the fair value gap that was at discount now used as support right there. So most of the times it's pretty hard to look for entries, but I bet you if you are on the higher time frame, you will eventually see something, and then that is when you get to run to your lower time frame and possibly look for areas where we'll be having entries. So yeah, so I hope that is it. And you can actually see that when it seems like everything is hard for you in trading, this concept of algorithm price delivery is actually one of the most important things you need to know in your trading career, so that you can actually know what happens if there's a structural break or hunt, and could easily predict where the price or the algorithm is wanting to deliver the price to. Alright, when you notice that the candles on the monthly time frame are ranging, you're paying attention to notice what is happening and trying to identify areas where we're having an algorithm data range. So that is used when it's not, it happens to be you can't find the structure. All right, and you shouldn't go to your lower time frame if you want to start your analysis. Start off with your higher time frame so that you could actually know what is actually going on. Is it ranging or is it printing a structure? Then you will know is an algorithm D range. Likewise, the same thing we analyze on Euro USD, and also if you check on gold. I told you guys that gold will be selling off, and we actually see it right here. And otherwise of you guys will be like, oh damn, I thought this is gonna buy. But then once the algorithm is trying to deliver price after taking orders from one side of liquidity, it needs to go to the other side of liquidity, following the highs and lows on the monthly time frame, and we are looking out for previous month highs and lows, previous 3 months highs and lows, previous 6 months highs and low, and previous 12 months highs and lows. This is the area when price delivers and executes and is being drawn to liquidity, areas where it needs to buy, areas where it needs to execute itself, each and every month for 1 year. Now I predicted to you guys on gold previously that price will be drawn to 12 months high, and we were drawn to that. And that was on the month of February, predicted to buy to target 12 months high. That is what actually happened. And I gave you guys a rambling that its next draw will be a 12-month low. If that would be possible, its next draw could be a 12-month low for its future price draw to liquidity. But then we still be targeting these lows, because when it gets to this major low, it could possibly be a hunt or it wants to break the structure. So we're only trying to take profits at this swing low right here, and that is on previous 3 months low. Now pay attention to the candlesticks, just like we saw right here, right? This candle took out previous month low, right? Okay, this is it right here. We went bullish at this point. We did not range right here. We went bullish at this point, and then this is February. What did February do? February took out its previous month's high, right? It took out previous month's high. So what is this next? It's natural liquidity. This natural liquidity will be area of sell stop, and we actually see it deep down there into there's no wick right here, but then we know it took liquidity from here and traded into imbalance. This current month, being the month of March, opened and refused to go lower. So that means their sell stop is protected. And if we go to 4 hour time frame, I already shared that a long time ago in February, and we saw a bullish structure, and I say targets previous month high. That's what we see happen right here, and then finally trade up to 12 months. And right here, this is not a range right here, all right? This is not the range right here. Now the point is at which price range right here, though you can actually apply the range right here, hunt on previous month high, and you can find some entries right there, and it happens to then go to this low because we are targeting bullish, all right? And the reason why we are being bullish is because it has already taken orders from sell side liquidity pool. So its next draw after taking this range low right here, liquidity resting on this range low, which is the area of support, its next target will be area resistance. It should deliver the price to that area. So we got there and we range 2 candles. Now what did you identify? The first thing you identify was that price took out previous month's high, right? So after that, what are we to look at? We should be looking at, we could go down to the 4 hour time frame and we'll be looking for confirmation entries. Now first of all, after noticing the structural hunt, mark your previous month's highs and lows. That could be your take profit. You're taking profit for the previous month high or previous month low, depending the direction of bias. It has to be, but in this case you will targeting previous month low. So that means you could be holding the trade for straight 1 month without panicking. You're now swinging your trades. So that is what we see. Because right here, this is previous month high, the range, all right, not the structure, this range right here. So also right here, this is the previous month low, right? So we trade higher, swing low right here, trade higher, gave us a failed high, and then we have this right here, which is the structural break, right? And we violated an order block right here, and this right here, this bullish order block gave us this right here is a bullish order block, and that will be the first area we'll be having an entry. But then you could also wait for confirmation, right? So talking about confirmation, now this is the 3 hour time frame, right? So in the 3 hour time frame, this right here is the supply, or we could choose this right here. Some those that trade supply and demand, they always choose the last candle before the impulsive move down, before the imbalance, all right, for the inefficiency. And price tab right here we reject. And then if you're looking for confirmation entry, this right here, your bearish order block, that is where you could have your entry quickly. If you go to the 4 hour time frame, you can actually see right there, price quickly reverse right there, balancing the sell side, mitigating the order block, and we finally see dropped, and you trade it for 1 month and you target previous month low. That is a swing trade, a perfect setup, and you take your profits right there. So now after seeing that, you go actually go back to the monthly time frame again, even though you know that price is now going to go bearish, and you could be targeting 3 months low, previous 3 months low, and that is 1, 2, 3. This is the 3 months low, but then I like to look at previous month low before taking out 3 months, before looking forward to 3 months. Now this month June opened, traded higher, and it failed to go further high anymore. It failed to continue going higher, right? So that means we could be looking for confirmation entries right here to execute for sales. All right, so let's go to the forward time frame, and we use this right here. Okay, and if we go to the forward time frame, let's notice what happened right there. So this is the month of June that opened, and if you notice that when it opened, it violated a bullish order block right here, which is not a valid order block. It violated that, and let's go down to lower time frame. We could possibly see a confirmation entry at that point. So what we actually see is that we have this right here. We call it the king pattern, and that king pattern means that if you go down to lower time frame, from this point right here to the high of this candle's wick, that is the area of supply, or if for the case of selling, and if you get for buying, that is an area of demand. So to prove that right, let me show you. Some that trade supply and demand call it hidden base, and still the same thing on a 1 hour time frame. Let's go to 4 to 5 minutes and we look at it. Okay, so right here you can actually see right here that is the hidden base. In the case of 45 minutes, this is where we are, and we could just put your stop loss right here because the trade candle is the base. Alright, so we have a radial base drop, supply zone, and sniper came back very close, and now we could hold the trade complete 1 month, right? You can actually see we had a confirmation entry. Alright, so now price dropped and gave us this low. For that month we have this low, so we are targeting, we are trading every month. All right, so in the case of price have to reverse, so now we opened again. All right, this open right here, trade higher, and close right here. Then this opened and traded lower, and then fell to break previous month low. If you go over to the forward time frame right here, and you could find the entry right here. Now this right here is June, right? And this right here is also June. Now price came back to this June order block, and then July, that was July, and then we trade higher. We balance sell side, we balance sell side. Price retraces backwards to where the bullish order block we have right here. Now probably if we go down to the lower time frame, we could possibly see a structural shift, but then you could notice that it mitigated the previous order block, so that is like a confirmation entry to enter the trade. And yeah, so then from there price starts to trade higher, filled in imbalance right here, trade higher, and so we are holding for the complete 1 month, right? We get to hold for the complete 1 month to see what happens when the month ends. Alright, so we traded higher and we finally took out the previous month high. Remember, it failed to take out this previous month low, so that means we'll be targeting previous month high. And if you're expecting structural break, then it happens to be that price did a hunt there. That means it doesn't mean that you predicted it correctly, but you were expecting it to break that high, but it happens to be it did not. It just hunted the high, so that is not a valid structural break. Alright, so we see the hunt on previous month's high. So we will be going to the forward time frame and we look for confirmation entries, right? So let's look for the confirmation entries. Now the previous month high was formed right here. Price trade backwards into a bullish order block, this last sell candle right here. We trade backwards and we mitigate the area of supply right here. So that means we are having a failed high. Price did not break structure. This created a failed high. And we finally traded lower and we finally break this right here, change your character, violating the other block because it didn't break structure. So what did price do? Price reversed backwards to your bearish order block, and that is where you could execute your trades, right? You finally execute the trade and you hold again for complete 1 month, targeting previous month low, which is resting right here, and also this month. Now it took that out, right? So if you could remember, the analysis I've showed with you guys was right here. I marked out a fair value gap and I say the gold should rise at this fair value gap, but it happens to be that the wick traded above premium, but then the body of the candle closed below that. So let's go to a monthly time frame. We still analyze that, and right here this month opened, failed to go higher, right? Okay, this one has already sold down, took out the hunt, and possibly traded backwards. Okay, so if you want us to look at this one, we could look at it, and then we change the color right here. So if you go to the 4 time frame, after the liquidity hunt, we traded higher, and then we came back to fair value gap, and then for the whole of that month, this is where it ended, and that is it right here. So we change the color of that. That is the month end, and then this month opened and failed to go higher. So what are we doing? We are looking for a confirmation entry, and what it did right here is it traded backwards to the supply zone, and then we see the drop. What did we target? What are we to target? We have to target previous month low. So in this case, when it traded into the previous month low, it did not did a hunt, it broke it. You actually see how clean it is. It broke it, not a stop, not a hunt. So its next draw, we might target in this previous month low. So even in case there, it could possibly be a hunt or a structural break to be drawn to 12 months low, where we're having triple bottom. So we're having sell-side liquidity pool right here, area support right there. You can actually see that I'm doing all these without marking our structures. We are like building high, low, higher, 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 low. It is because this is not a structure. A structure is not formed. What is formed was a range, a D range. This is not a structure. This is not a structure. These are choppy markets, right? These are choppy markets. So after the hunt, looking for structural shift, and then you execute your trades. Hold for a month. Hold for a month. The algorithm range is what you could actually need. It's very important because price delivers with algorithm. Algorithm means a set of instruction, a set of program that is made to solve problem. And when it comes to market, it gets to solve the problem of traders executing trades, and gets to solve the problem of taking orders from both sides of the market, from the buy side, from the sell side, and respect the price level of the trading activities that is going on electronically. All right, so you could also use that on synthetic indices also. For example, if you look at VIX 101S, you can notice that I sold VIX 101S at a fair value gap. I think I posted that on Facebook. I don't know if I posted it on YouTube. This right here, I took a sell from here, a fair value gap. And what's the reason of that? This right here was September high, right? And when September high opened, it didn't go higher, traded lower, filled in buy side, delivered back to sell side. So what did I target? I target previous month low, and it happens to be what it did was a hunt. Let's go to the monthly time frame. I will show it to you right there. You can actually see it right here. Alright, so this is the stop hunt on previous month low, and then after the stop hunt, price shifted, right? So if you notice the daily time frame, this is where price shifted. It created a high, created a low, created a high, and what is it drawn to? It is now drawn to September high. If you check that on your monthly time frame, this is September, right? And this is October. October open right here, and we hunted that September high, and it happens to be still going higher. So it did not shift. So that means it could be drawn to 12 months high. We still have imbalance to mitigate, and we likely see it up to this order block right here. All right. So now if you go to the forward time frame, you can actually see how it's been trading after it hunted. All right. We traded higher, lower, high, and we trade lower to KML right here. We have the quasi-module level right here in confluence with the order block. We have the structural break right here, and price tapped into it, and we see trade higher. Now when you trade higher, it mitigated a fair value gap right there. It came back to a fair value gap right there on the 1 hour time frame. So if you check closely, there's no sell side imbalance. That's balanced every sell side. So came back to the buy side fair value gap and balanced it quickly, and after balancing it we traded higher again. So trading higher, taking liquidity, we came back to another fair value gap, we traded higher, came back again, traded higher, came back to a other block right here, and this other block is valid. And why is it valid? It is valid because it caused a break of market structure. All right, caused a break of market structure. What is the break of market structure? When I close this, and right here, this is the break of market structure right here. Okay, so it reversed backwards to the other block. Okay, reversed backwards to the other block, and we traded higher again, and now it came backwards to another other block right here. This down close candles and other block at the 4 hour time frame. All right, so it traded backwards to the 4 hour time frame, other block, and we traded higher. We have taken the previous month's high. Now in this case, we will not do anything. We are waiting for the 4 hour time frame to give us a confirmation. All right, give us a confirmation. So there's no structural break at this point, so we could possibly just watch the market, but then taking profit from previous month's high. Okay, and also checking 75.1 also, you can see we trade into the fair value gap, and paying attention, that would be on the monthly time frame right here. If you check the monthly time frame, we opened this September, and it took our previous month high. So when it took our previous month high, one thing with synthetic indices is that most of the time it does not give a confirmation entry. All right, it does not give a confirmation entry. So after the hunt on previous month high, okay, I think it was on the 13 minutes, it did the shift. Right here we have the structural break after we had a failed high. So price traded backwards to the other block responsible for that, and we traded down for the whole 1 month. All right, so we could just trade and hold for 1 month, and we take profit for that 1 month, and we're checking out for the next month. All right, so the next month being October opened right here and failed to go higher. So we could go to lower time frame, and we'll be looking for confirmation entries. All right, so this is, where did October open? All right, so October opened right here, and it happens to be that when it opened, it traded into the fair value gap, and that was the fair value gap I marked out previously right here. All right, so this is September took out liquidity from here. October opened, we have a failed high, and we trade lower. So has now currently traded lower. There is no other imbalances or stuff like that to say it could likely want to go lower. It could reverse backwards, but then no confirmation entry for that. So we get to see what happens for this trade 1 month. So you actually get to see there is also no structure found right here. So using the algorithm range, you can actually use it on the range market to predict and look for entries, and then here you trade for that complete 1 month. So that is the beauty of understanding what algorithm price delivery is all about. And yes, I also had a course available on Udemy, so you could possibly go to Udemy and you could purchase the course. And when you're going through the course, I would love you to ask your questions and stuff like that, and you can reach me out on my Facebook page. So this right here is very cheap. It's very cheap, not too costly. So you can reach me out on my Facebook page. You have my Facebook page. I know majority of you are following me on Facebook, so the same name, Demetrius FX Trader. If it happens that you're finding it difficult to reach me out on my Facebook page, you can still get me my link. This is not it. So you can still get it from my link on my YouTube. My link is posted right there. Okay, so if you go to my profile right there, you could actually click my Facebook link right here, and it will direct you to right here, that place, to my Facebook page, and you could message me right here. You could follow me on my Facebook page, and if you click the one more link, you can actually see access to my course on Udemy, in which I'll also be dropping on the description link. So till then, stay safe and see you guys later on. Bye.